Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. One of the biggest things that everyone is wondering right now is what the hell is going to happen next in crypto? Are we about to have the largest bull run of crypto history? Or is this all leading to a major sell-off? And everyone has been asking me this question. Nick, what is your viewpoint on the market? Well, we're going to talk about it in this video. I'm going to go over everything in depth, and I'm going to talk about a few things from black swan events to what the Fed is planning and to even liquidity cycles and things like that. So let's dive on in. So first and foremost, Bitcoin. Bitcoin is nearing 44K. It's going to reclaim a significant level once we do break over 44K. The big thing to watch for is $45,000 to $47,000 in the short term, because that is a big supply zone, and it is an area where we could reject heavy off of those resistance zones. Now, if we get a daily close over 47K, that will be very significant, and it will be very bullish in the short term. That would essentially allow us to full send to $50 to $60,000. Now, again, like I said, we need to be cautious once we get to that $45,000 to $47,000 level. Outside of that, altcoins right now are having a blast. A lot of altcoins are actually having an incredible move, especially even on the 7-day span. Some of them up 50% plus, and these aren't even some of the best ones. I mean, if we actually go over here, so actually let's go to the second page just to see which ones are really gaining a lot, because there's been a lot that have been moving up the ranks to jump into the top 100 space. We can see some of the 7-day span on even the second page. Again, a lot of these altcoins up 50+%. There's some altcoins that starting into the new year are up like 5-10x already. So altcoins are starting to move pretty heavily right now, and so is Bitcoin. Bitcoin is up 10% since we called the bottom in the free Discord, completely free. And outside of that, everyone is wondering, are we about to reject again and make a lower low on Bitcoin in the short term? Well, let's talk about it. The retail sector right now is being blinded by Evergrande. Everyone is focused on Evergrande as they do think that this is the start of another 2008, if you will, because this is a large portion of commercial real estate. And they believe that with commercial real estate going down under, so does retail real estate. Now, if you guys do know, 2008, guess what? Real estate really started the big breakdown. So once we do see real estate go, everything else goes with it. I think that this is too obvious of a black swan event, because everyone has been watching this for over 2+ years now. And we have breaking news. Hong Kong court orders liquidation of Evergrande. It has arrived. After 2 years in limbo, Evergrande was ordered by a court in Hong Kong to liquidate, a move that will set off a race by lawyers to find and grab anything belonging to Evergrande that can be sold. Now, I don't think that this is going to snowball the way everyone is believing it is. The herd has been following this for a very long time. And even over here, we have the New York Times. Evergrande will be dismantled. A big bang end to years of stumble. Again, they think that this is going to be a major death spiral for the real estate space, because this is China's biggest real estate firm. I don't think that this is as significant as most people are making out to be. I think that we are blowing it out of proportion. Now, yes, it is a big move on the real estate space, but I don't think that's enough to cause it to spiral out of control and lead to another 2008, at least in the short term. We have over here from Buy the Crypto Tip, just in, it's all about the Evergrande liquidation. Evergrande is the next domino. Oh boy, and here's from Business. This is from Bloomberg. Check it out.
It is about Evergrande. It is about China. Evergrande ordered to liquidate. A long time coming. Remember that this company defaulted about 2 years ago, and it has since struggled to restructure its debt. Now, the move today, the order to liquidate, offsetting some of the policy moves by China. We have CSI 300 index in negative territory, reversing all the gains that it made this morning. HSI, though, maintaining its gains, propped up by some property plays. The Kospi up by more than 1%.
So again, once mainstream media starts to really talk about it and it sounds scary and it's concerning, I feel as though it is a big move against the retail sector. And let's actually talk about that. So Zero Hedge put out this great chart. Now, this is actually from JP Morgan. We do see here's Marco taking pride in keeping his clients out of the biggest melt up in decades. Are you more likely to increase or decrease equity exposure over the coming days/weeks? And here we actually have the current equals 29%. We have the percentage planning to increase equity exposure. Look at this. 29% are planning to increase equity exposure at a time where we are most likely about to witness one of the largest melt-ups in decades. Why are we, though? Well, let's talk about it. So, again, outside of Evergrande, the big thing is, what is the Fed going to do next? Are they going to pivot? Are they going to hike? What's going to happen here? So we have over here from the Kabaisi letter, it's official. Markets are no longer expecting a rate cut in March of 2024. There's still a 42% chance of rate cuts beginning in March, but this is a major shift in expectations. Just 2 weeks ago, markets saw a 90% chance of rate cuts beginning in March. Odds of rate cuts beginning at next week's Fed meeting are now down to 2%. We are still seeing 150 BPS of interest rate cuts priced in to futures, but Fed pivot hopes are slowly pulling back. And here you can actually see a lot of those major meeting dates of the Fed. We have March 20th, which is the big one. Then we have May 1st, June 12th, July 31st, September 18th, November 7th, and then December 18th. Now, again, I do watch these Fed meetings heavily as they do give us a glimpse of what to expect in the markets. The major thing is that this is watching for the macro. Again, when we look at crypto, things are looking great. Things are looking good. And I will even say I'm very bullish for the rest of this year. But this could significantly change things. When we are getting rate cuts, right? That means that we are getting quantitative easing, which essentially is money printing. They are going to be printing money. Now, we love printing money because guess what? It means that crypto is going to increase in value, and there's going to be a surge in the markets. There's going to be a lot of volatility. But when we don't get quantitative easing and we don't get those cuts, well, guess what? Now, you don't see that. The markets either start to drop a little bit or they slow down. Now, to me personally, are we going to get rate cuts? It could definitely happen. But we still need to watch and see what the Fed is going to do because it is important, at least in the short term. But we have interest rate expectations have been all over the place. The only consistent theme is markets getting too dovish too soon. We maintain our view that the Fed is unlikely to cut rates 6+ times in 2024. And here we can actually see a lot of what we are expecting, right? This is the overall meeting probabilities. Now, we don't know what's going to happen. Nobody's going to be able to tell what the Fed is going to do next. But in my opinion, they are going to make sure that the markets look good for, of course, you got to remember that we are now in election year, right? So they have to make sure that the markets are propped up. They have to make sure that the markets look good because it's an example to utilize around the campaign. So in my opinion, what would be the best thing for the Fed to do at this point in time? Well, it would be to cut and print more money. Hey, look at everything's looking great. Everything's looking good. This will lead to unsustainability, which will also lead to a major meltdown. But wouldn't it make sense to have the major melt up and then have the major meltdown like we did see back in 2008? Because I'm on the same page with a lot of individuals where we're talking about this cannot be sustainable in the short term or even in the long term. Technically, in the short term, yeah, it is sustainable, just like they did back in 2008. It would make the most amount of sense if we got that big melt up and then they pulled the rug on, of course, those that are late to the party. Because again, as you see here, the percentage planning to increase equity exposure, 29%, that's pretty damn low. But also, look at liquidity. Markets should be buoyed by increased liquidity in 2024. Conditions are becoming easier in the global economy with an expanding pool of cash and credit. And if we actually look at this, this is the number one thing to look at. This is the global liquidity index, and we can actually see what is happening here. So we have the long-term cycle and we have the global liquidity. So the long-term cycle is the one in the background where it's going like this, right? The dark blue is the global liquidity. And as you actually see at the bottom in 2022, right before the new year in 2023, liquidity bottomed. This is where you saw FTX implode. The market was so damn bearish. And guess what? This presented us with one of the greatest buying opportunities in crypto and even in markets alone. After that, we saw global liquidity increase drastically, and here we are at now. So the question is this going to continue to follow in line like we did see back in 2020, leading up into 2021, and then we start that downward spiral? Now, if that is the case, we most likely top out sometime around the end of the year, possibly even Q1 or Q2 of 2025. It's going to definitely be interesting to see what happens, and they even do mention here, the public face of the US Federal Reserve is to emphasize quantitative tightening, the retreat from the era of the massive expansion of its liquidity support for markets and economy known as quantitative easing. And in 2023, its size of its balance sheet fell 7.5% as funds raised from maturing US Treasury holdings were not reinvested. However, measures of Fed liquidity injections into the US money markets show a sharp jump higher. Quantitative tightening was partly offset by the Fed's emergency bank term funding program that offered loans to banks in the wake of the collapse of Silicon Valley Bank. So as we look at this, right, liquidity injections increased by 13% in 2023, which is why we saw the nice spike up in liquidity. The question is, are they going to continue to have quantitative easing that will benefit the liquidity cycle, pushing these markets higher in the short term? If you believe that, then yes, crypto is about to have the largest bull run in history. And the reason why I say that is because look at where we are at right now in terms of the overall market. Look at where we are at in terms of the global liquidity index, and look at how much adoption there has been around crypto already, and not to even mention the Bitcoin ETFs. Just in, Google updates policy allowing Bitcoin and crypto trust products to be advertised. They are ushering in the herd back into crypto, and the herd is coming. They will buy up this space. Liquidity around crypto specifically will also improve greatly by the herd showing up. This will also add fuel to the fire around crypto. And when we actually look at Google Trends, we could see that the cryptocurrency search term in the last 5 years worldwide is basically dead. So the question is, are we about to see this spiking up, crypto having a massive bull run, one of the largest in history, and the retail flood coming back in, liquidity improving, just to have the rug pulled yet again on the crowd that is late to the party? In my opinion, that makes the most amount of sense. And by the way, Bitcoin in terms of the last 5 years, just recently saw a major spike with the ETF announcements. So far, it has cooled down a little bit. But I do believe that we are about to see this spike right back up, just like it did back in November of 2020. Because look at the same exact pattern that we see back there. We're basically playing into it right now. If this is the case, go back to December of 2020 and go all the way back to what happened after the fact. Massive bull run. Beyond that, we could actually see that the total net ETF flows after 11 days is $742 million. 11-day average, $67.5 million a day. After 1 day, $625 million. After 2 days, $209 million. Rolling 10-day net flows, $116 million. And after that, 7-day, 5-day, 3-day, 2-day is all negative. Now, what has changed? Well, here you guys actually have Bitcoin ETF flows are stabilizing both directions. Slight taper to Grayscale's Bitcoin exodus, but an equal taper of inflows to others. First 6 days average $192 million a day in, but last 5 days average $81 million out. Other ETFs seem to be dependent on Grayscale outflows for demand, would prefer to see divergence. Now, in my opinion, Grayscale, the outflows, it's slowing down. I think that we have hit the bottom point on that. I think that we are about to see a large amount of inflows into these ETFs, which is also going to provide a lot more value for the market and push Bitcoin up a little bit more. Again, when we really look at what's going on, the herd is buying those ETFs. We know this is true, but also a lot of people love trust simply because of taxes and things like that. They would rather pay the fees to avoid some taxes in the short term. Trusts are great for that. But beyond that, as we look at other things, like I said, election rally. This is from Income Sharks, midterm rally. Here you guys actually have the S&P 500 index total returns during presidential election years 1928 to 2016. You can actually see where we have negative performance on the S&P 500. This goes back to 2008, the dot-com bubble, and even prior to like the Great Depression and things like that. But for the most part, we can actually see that election years, it's very bullish for crypto and for overall markets. Now, crypto doesn't have a lot of price data to support it, simply because, again, we have election year 2016, election year 2012. We don't have a lot of price data there. But we do know that 2020 was also a pretty big year for crypto. And we also know that right now the markets are looking pretty good. The S&P 500 has been doing very good. All-time highs have been getting hit. It wouldn't surprise me if we continue to have this massive election rally. It would make a lot of sense. And plus, right now, as we look at Bitcoin, here you could actually have the Bitcoin quarterly returns and Ethereum quarterly returns. You could view all of the information. Again, right now we are in quarter one. So far, it has been bullish, 2.76% on Bitcoin. But versus all of these other major years, we're nowhere even close to any of the major percentage moves. Same with even Ethereum. Ethereum's only up 1.26% versus 52.15%. There has been 2 negative years, 2018, which was the bear market, and 2022, again, bear market. Besides that, we have 52.15%, 160.7%, 3%, 5.72%, and then 518%. But here you guys also have the monthly returns on Bitcoin. Again, January usually isn't that bullish. February, on the other hand, is very bullish. 2023, it was kind of the beginning of a major run for Bitcoin to kind of bounce back again with liquidity improving. But besides that, 2022, it was up 12.21%. This is right during a bear market. Besides that, 2021, up 30, almost 7%. This was in the middle of a bull run. And if we go back in time to those bull run years, 2017, 2016, around this time, again, we were kind of in the middle of a bear market. 2016 was kind of the start. So you could argue that 2017 is where we are at now, if you wanted to. Again, I'm not going to make that argument, but you could argue that it is. Nonetheless, the next few months should be pretty bullish for Bitcoin unless we are going to follow 2017 precisely. If that is the case, then March could get a little bit bumpy. It could be a little bit of a bearish month, short term at least. But after that, if we are going to follow 2017, look at April, look at May, look at June, look at July, look at August. This is 5 straight months in a row of green, followed by 1 negative day, then an additional 3+ days of green into, of course, the topping for Bitcoin and the top of the rest of the market. So again, in my opinion, I don't think that we are following a specific year totally, but I do believe that we could be seeing a major bull run brewing right now around the space. We need to make sure that we are being extremely vigilant and being careful, though, not to jump the gun. I still have a lot of stablecoins on the sidelines. I think I have like 10% of my portfolio allocated to stablecoins. But right now, as we do look at the election rally, we look at liquidity improving, followed by bearish sentiment. I mean, it seems as though the mainstream media is trying to scare markets with a lot of this. And again, even if we look at JP Morgan planning on to increase equity exposure 29%, that's pretty damn low. It wouldn't surprise me if we front run the retail sector like we typically do, and have them buying at the top just to have the rug pulled on them. Right now, the overall market is still looking very good. We are leading into February, which is typically a good month for crypto and for markets. March is the one to really watch for volatility, but we need to make sure that we are aware of 45 to 47K on Bitcoin in the short term, as that is a big area of resistance. And that is where we could see some problems brewing for Bitcoin, which with Bitcoin dominance sitting at over 50+%, it could cause some problems for some altcoins as well. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on because of more free content. If you guys are more welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, thanks for watching. This has been Nick. Peace out.